Good morning, guys and girls. So we're starting off here on the Bitcoin chart on the 4 hour. There's our all-time high of 69. So let's just zoom in a bit. I'm first gonna zoom in slightly and then I'm gonna move out slowly. So today I'm not gonna give a trading plan. I just want to show the importance of levels. I'm gonna go through all the levels that I have on my chart, or all the higher time frame levels, and then just so that you get an idea of what I use and what I look at. So first of all, you know, I'm quite fond of this fixed range tool, and this is this range that we've been in, how can I say, since the 27th of March. You can see the point of control, how important that was. We've been reacting off of there, and then the value area low has been, we've had quite a reaction there, although we've now, this was like, you can see this is a deviation, and then we've slightly moved through it, so it's probably a bit washed now already, but very important to stay above the value area low, and then that point of control is going to be the crucial level to break for the upside. Then using the magnet, I use those 2 points, and you can see how or why we rejected off that line. So that was the first attempt, and always the first touch of a level is always quite reactive. So the second time maybe not as much, if the market stays bullish, and then the third time maybe move through with a little retest back down. And then our Fibonacci, just a little summary of how I use the Fibonacci. So that was the biggest pullback on this, well, moving back down. That was about a 4% pullback, that was like 2%, and that was also 2.7%. so you never know, when this market goes down, which Fibonacci you must use. So you probably would have used that one up there. See, there was some nice reaction, and then it goes through, and then you start looking for a new level down there. You see there was a reaction, there was a good reaction off of there, and then you go down there, and then it goes even further. So that was the just over 4% down. So just to take it a little bit further, that's so close. Well, that's probably my next level down there, and that one there is too close. I wouldn't even consider that, and then I would go right down here before this big pivot point. So you work off pivot points with a Fibonacci, and just looking at that slightly higher time frame, look at that perfect reaction of the 382. So when you've been in an up move like that, and you have a slight retrace, and it bounces off the 382, that's considered quite strong, and the market's quite bullish. That said, it was over the weekend, so well, Friday morning 4 o'clock. Okay, so that was still on a trading day, so that can be considered quite bullish. Okay, so there's your Fibonacci. The next level that I have is this horizontal ray, the support resistance levels. So that we had quite a move up here, and then we were trading in this range for quite a long time, so we needed to break that. So that there wasn't a swing failure there, but we went above it. That was a deviation below, and now we're bouncing there. I think that is quite close to that value, and the value area low is slightly above there. But those are levels that are always very important, until you can see we're retesting. Now we need to go up from there. Really good structure there from that support resistance. And then I've got this ray also acting as resistance now, so I use the magnet for those 2 points, pivot points, and you can see how perfectly we rejected off of there. The good news is that it is a ascending trend line, so probably another reaction when we go off the swing failure that high, and maybe not as big a deviation, and then going back up. My next one I use these 2 magnet points here, and you can see once again where we bounced off on Friday. There was some reaction around there as well, and then so the market doesn't just stop in the middle of nowhere. There's always levels and reaction. So if the market had a lot of momentum, that's why you see that push through. So it's basically, you can probably say, a swing failure of that uh, support line, or that support ray that we've got in there. And then there's a really big support resistance line that comes from way back here in the 5th of October in 2000. See, those were the corona lows, but these are the touches that we have down here. You can see some reaction there, deviation. So we're just going through there. We about as high. See, we needed to have a bounce to make it look bullish. So we tried to go, we broke through it. We had a little bit of a reaction there, but not strong enough. Once again there it became resistance. Now we've gone through, we've closed some dailies above it, and it looks like we can make a bounce, but we'll need to show some bullish strength here, otherwise we're definitely going to go down to the lows again. That one there, and then this ray that I've also got here, we're sort of above it already. I'm just going to go a little bit lower time frame. I obviously use that and that point as our magnet, and you can see there's some good reactions off there. If you zoom in, it really looks, well, it excites me when there's such good reactions off those levels. Just look at that level there. Okay, and then I think yeah, these were just daily levels I had a look at before, and then our ranges. It's gonna go right back. I think this will fit in on the 4-hour. Yeah. So this is from the 1st of January last year. That's when we moved into this higher or upper range here, and you can see the point of control. If I go right back, once again, it's let's just move a little bit there. It's so close to, well, it's basically perfect resistance there, and we just weak through it now. So yeah, that's why you'll see, you'll understand why I say this is such an important level. It's our current range, local range, point of control, and also the year and a half point of control. So that's, and I've been going on about this $47,000 area for quite a while. So really crucial that we capture or confirm this $47,000 area. We break through it and confirm it. So then from December, this is when we drop down into this range that we are in now. Once again, no surprises, same point of control. We also had some really good reactions off the value area low. Look at those nice bounces there, lovely. And then the only range that we've got reference for where we are now is that little range. I just call it the 3rd of December range. So we went down there, and now we're broken into there. I've got a little rectangle that I've also been going on for a long time about. I kept on saying we need to break into this red box, and now we're in it. So we deviated off there, bounced off. So it looks like we're gonna stay inside there, but the rest of the week will tell. If we just zoom in there, you can see that value area low once again acting as support, but slightly concerned that it's been wicked through a few times, so obviously it's being washed now. And then I've got a range just for this year that we are in right now. There from the 5th of January. Point of control, they had some really good reactions there, and the value area high as well, and we're obviously above there, so that is our make or break level. We can't go below there. First of all, those levels there, that's acting as support. The previous range, can we say, highs, so we mustn't get accepted back into this range again. Next thing that I've got is our channels. See, this is quite a high time frame channel. Yeah, well, basically from this year, so I use that point there and that point there, and these here for my magnet, and you can see how well respected there, and then the midpoint well respected, and then we rejected off there. So this is a really important parallel channel. I will keep this on my chart if I was you. Then also using going back even to a higher time frame, that's our all-time high and our previous all-time high, and the lows there in June last year. And then I used the 0.66 and the 618, I call the golden pocket. You can obviously see the reactions there for yourself. And now we're just right there once again. There's so many confluences why this little wick we got rejected off yesterday. This was also a channel I've been from those highs. I just added some Fibonacci levels in to have a better look. And then there's another interesting one also in this lower time frame at 786, very well respected there, that level, so I'll definitely have a look at that for support as well. And also it's ascending. I think that was the last channel that I had a look at here. Yeah, that we're not going to spend time there. And then our higher time frame levels, just going to zoom in slightly here, maybe go to the 1 hour. Today is slightly longer, but I just want to show all these levels and make sure you see the reaction. So that was a weekly level, really good reaction of that level there. So this is more for day trading. Look at that daily level, how well it was respected there. That one as well, rejection. That was probably the most accurate rejection level we had off that week up there. When was that? That was 12 o'clock. It's a bit of a strange time. Normally 2 o'clock the Asian market has quite a reaction. And there's another daily level up there coming from long ago. Look at those perfect touches there. I think then my last daily level is this one, once again also coming. So yeah, it's been washed, but just look at that, those reactions off of there, and then also that held for our support. So you can sort of recall all the levels I've gone through, and you can maybe switch them all on your chart, and you'll see there's so much confluence here, and there's quite a bit of confluence there, and that is a really decent range to trade. That really excites me. I mean, that's 6.7%. That's really good levels or ranges to trade in. Let me just switch that off. And then last thing that I wanted to show you that's really relevant is the monthly level. So that monthly came from there, and that was the monthly open. Once again, that was just a perfect touch on there. So you know how to do all these levels, these daily, monthly and weekly levels. So I always have them on the previous day levels, previous week levels, and the previous month levels. So these are previous month levels, and there's the weekly levels. Let me just switch that off. You can see that I just love it when these levels are respected like that, just perfect. It's small, you know, you can't really do much with that, but it's just, the market doesn't just do anything. There's always news, but then it runs to a certain level, and it reacts off a level. It doesn't stop in the middle of nowhere, reacting off good or bad news. So that's it. Some really good levels here, I think, that you can keep on your charts and keep watching and checking, and keep your eyes on the charts, and we'll speak again tomorrow. Cheers.